Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao. During Monday's trading session, the EURUSD rebounded from the 50% corrective level at 1.1830. Reversed in favor of the US dollar, and consolidated below the Fibonacci levels of 1770 and 1696. As a result, the decline in quotes may continue today toward the next Fibonacci level of 100% at 1.1577. A consolidation above 1696 would favor the euro and allow for some recovery toward the 61% corrective level at 1.1770. The wave structure on the hourly chart remains straightforward. The last completed upward wave failed to break the previous peg, while the new downward wave confidently broke the previous low. Therefore, the trend remains bearish. The bulls paused during the had-been large-scale advance, which would not have been possible without Donald Trump. However, Trump's actions in the Middle East, which triggered large-scale military operations involving around a dozen countries, are now supporting the US currency. On the 4-hour chart, the pair reversed in favor of the US dollar, after bearish divergence formed on CCI technical indicator. Events in Iran then enabled a consolidation below 1680-1694 support level. As a result, the decline may continue toward the levels of 1642 and 1577. No new emergent divergences are observed on any indicator. Gold, sweet gold. We've got a trading plan for these commodity asset presented by Dimitrios Tsipras. Gold is trading around 53.77. with a positive bias after covering the gap left on Friday. The metal could now continue its rise in the coming hours until it reached the top of the downtrend channel around 54.50. Fundamental data is generating considerable fear in the markets, so gold is expected to continue rising in the coming days and could even reach the plus 2.8 mirror level around 56.25. If gold encounters strong resistance around the upper bound of the uptrend channel, located at 54.45, it could be seen as a signal to sell around this area with targets at 52.65. Where 21 SMA is located, it's a sign line on the graphic. A sharp break below the 21 SMA and break below the uptrend channel and consolidation below 52.50 could push it quickly down to the psychological level of 5,000 USD, which in turn coincides with the 200 EMA. It's a purple line on a chart, and the 8.8 mirror level. It's a sign line on a graphic, representing strong support for the asset. The Eagle indicator has reached overbought levels, so gold will likely undergo a series of technical corrections below its weekly high in the coming days. That's all for today. See you online soon.